Two buyers who already knew the business. Closings in St. George, Utah and Ormond Beach, Florida. Two recent closings make the point. One is in southwestern Utah, the other on Florida's northeast coast. Different markets, concepts, and brokers, but the deals share an important pattern. Both sellers were leaving for reasons unrelated to performance, and both buyers arrived with real operating experience. Those conditions helped create a clean close. Deal 1. A 30-year multi-unit franchisee consolidates in St. George, Utah by Eric Gagnon. We sell restaurants, Florida Daytona. The seller. The seller behind listing number 33148 is a multi-unit franchisee with more than 30 years in the restaurant business, building a portfolio across state lines and multiple economic cycles. After decades of operating in several states, he chose to consolidate his holdings into one state. Selling the St. George location allowed him to focus capital, travel time, and management attention where the rest of his portfolio is located. He was not leaving the industry. He was tightening his footprint. A seller who is reorganizing rather than escaping has room to be patient and transparent during due diligence. He is not racing a deadline or hiding a performance problem. The buyer. The new owner worked for this brand roughly 20 years ago. He already understood the systems, standards, and daily rhythm of the concept before reviewing the financial performance of this location. His motivation was diversification. Rather than invest in an unfamiliar industry, he returned to one he already knew, this time as an owner. His brand familiarity and investment strategy made him credible to the franchisor and comfortable for the seller. The deal. Eric Gagnon of We Sell Restaurants, Florida Daytona, represented the listing from market through closing. The assignment crossed state lines with a Florida-based broker managing a Utah restaurant sale through the national We Sell Restaurants network. Eric matched the restaurant with a buyer whose background fit the business and kept franchisor approval, lease assignment, financing, and due diligence moving forward together. He described the transaction as having a great buyer and a great seller and confirmed that We Sell Restaurants delivered value beyond the introduction. Deal 2. An owner-built location. Trades hands in Ormond Beach, Florida by Brittany Gates. We Sell Restaurants, Florida Northeast. The seller. The seller of listing number 39354 built his location from the ground up. He handled the build-out, selected the equipment, designed the layout, and established the operating systems. The restaurant was not inherited from a previous tenant and adapted around someone else's design. An owner-built restaurant can mean equipment selected for the operation, a layout designed around the flow of the business, and fewer deferred capital surprises for the next owner. He sold to retire. Retirement sales can create strong acquisition opportunities because the seller's motivation is personal and planned rather than financial and urgent. There was no distress driving the timeline and no performance problem being covered up. The buyer. The new owner brings experience in restaurants, franchise management, and operations. She was not entering the industry. She was buying further into it and evaluating the restaurant as an experienced operator. She viewed the acquisition as a first unit rather than a final one. An established coastal location with a proven customer base gave her a foundation to build from. Ormond Beach strengthened that case. The Northeast Florida corridor combines permanent residents with year-round coastal traffic, creating a steadier customer base than a market dependent entirely on tourism. The deal. Brittany Gates of We Sell Restaurants, Florida Northeast, managed the transaction from listing through closing. Positioning an owner-built retirement sale meant presenting the build-out, operating history, and coastal market as connected strengths, then finding a buyer who valued all three. The buyer also got married the week before closing. Managing the demanding final week of a restaurant acquisition alongside a wedding speaks to the buyer's commitment and to a broker who kept the transaction moving through a packed schedule. Brittany delivered the close, what these two closings have in common. Neither seller was in trouble. One was consolidating a multi-state portfolio, while the other was retiring on his own terms. Both were forthcoming during due diligence and transferred businesses in good operating condition. Buyers should pay attention to why a seller is selling, because a planned departure and a forced one can produce very different transactions. Neither buyer was a beginner. One had worked inside the brand 20 years earlier. The other had built a career in restaurants and franchise management. Experienced operators and diversifying investors are an important part of today's buyer pool, often seeking proven performance rather than a turnaround project or startup. Both buyers chose to acquire rather than build. Opening a new restaurant means signing a lease, funding a build-out, hiring and training staff, and waiting for customers. Buying an established restaurant can provide revenue, staff, systems, and customers from day one. Experienced operators understand startup costs, which is why many prefer proven locations they can improve. In both transactions, the match was a decision rather than a coincidence. Finding a buyer whose background fits the business, then keeping franchisor approval, lease assignment, financing, and due diligence moving together is the work that separates a closing from a listing that sits. Frequently asked questions. Why would a successful owner sell a profitable restaurant? Many owners sell for reasons unrelated to performance, including retirement, portfolio consolidation, relocation, and health changes. These can be strong acquisitions because the seller's motivation is personal or structural, rather than financial. Does prior experience with a brand help a buyer get approved? Yes. Franchisors consider operational familiarity alongside financial capacity. A buyer who has worked inside the system may bring a shorter learning curve, better understanding of brand standards, and a stronger approval profile, even when that experience is from years earlier. Why do experienced operators buy existing restaurants instead of opening new ones? They understand the cost and risk of the ramp-up period. An existing location can provide revenue, train staff, operating systems, and customers immediately, while a new restaurant may consume capital for months before reaching stable performance. Does it matter whether the seller built the location? Yes, and buyers should ask. When an owner manages the build-out personally, the equipment, layout, and systems may be better aligned with how the restaurant operates. A buyer may be acquiring a location designed around the business rather than adapting to someone else's compromises. Whether you are consolidating a multi-unit portfolio, planning retirement, or looking for an established operation to build a portfolio around, call We Sell Restaurants at 404-800-6700 or visit WeSellRestaurants.com to connect with a broker in your market.